One of the main things you have to understand about real estate investing is that there are many ways to do it, and it really depends on what your financial situation is and what your goals are. So for example, Sam right here is a software engineer in the Bay Area, makes $500,000 a year, has 2 kids, and lives in the Silicon Valley where the median home price is $1.5 million. Now on the flip side, you got Bob here, who's fresh out of college, just got his first job, who's making $60,000 a year, doesn't have that much money saved up, and he lives in Ohio, where the median home price is like $200,000. And what I'm trying to get at is that these two different people have two different goals in different financial situations, and you can't invest the same way. So for someone like Sam, typically money isn't that big of an issue. You have a lot of savings, but you just don't have the time and energy. But on the flip side, you have someone like Bob, who is fresh out of college and doesn't have a girlfriend, has plenty of time, plenty of energy, but just doesn't have that much money. Now, one of the main reasons why I started this YouTube channel is because I see plenty of content out there for people like Bob, but not that much content out there on real estate investing for people like Sam. And so in this video, I want to go over some of the tactics and strategies that would apply more for people like Sam and maybe not so much for someone like Bob. By the way, if you're new to the channel, my name is Michael. I am a software engineer in the Bay Area, and I invest in real estate part-time. And on this channel, I show W-2 employees why they should be investing in real estate if they want to grow their net worth. So consider subscribing if you want to learn a little bit more about how I invest in real estate to help me pay less taxes and grow my net worth. Now, personally for me, I identify more with someone like Sam than Bob because I am a software engineer living in the Silicon Valley. So in this video, I want to share 4 of my top insights that I've had as a Sam that might not really apply to someone like Bob. The number one insight that I've had over the past few years is that cash flow is not necessarily the goal as of right now. So Brandon Turner was the host of the Bigger Pockets podcast. It's the biggest podcast on real estate investing, so definitely go listen to that. But he was the host of the Bigger Pockets podcast when I first started listening to the podcast a few years back. And he used to say this quote a lot, and it was something along the lines of, cash flow is what gets you out of your job, but appreciation is what makes you wealthy. Now, one of the main realizations that I've had as someone who identifies more as Sam is that typically cash flow isn't that big of an issue for me. Even if we didn't invest in real estate, my wife and I are still able to save a substantial amount of our paychecks every single month, even after all taxes and expenses are taken out. So I wouldn't say we live paycheck to paycheck. We're both lucky enough to have higher incomes that can afford our lifestyle and allow us to save a lot of money every single month. So with that said, we don't really rely on our real estate investments to bring in heavy amounts of cash flow. We can live off of the cash that we bring in from our jobs alone, but I'm not saying that you don't want to have cash flow eventually. However, if you're still watching, I'm assuming that you might be in a similar position as me and my wife. Now, the second realization that I had in our investment strategy is that our main goal is actually to increase our net worth as fast as possible. Like I mentioned earlier, I realized that our main goal as of right now while we're still young is not necessarily to build up a good amount of cash flow right now. It's actually to build up our net worth as fast as we could. And for us, that meant that we need to acquire as many assets as we possibly could in the shortest period of time. And quick tip, if you want to just quickly calculate your net worth, you can just take all your liabilities and subtract them from the assets that you own. So if you want to grow your net worth, there's really just 2 ways of doing it, right? You can either shrink your liabilities or you can grow your assets. Usually when you shrink your liabilities, that indicates a decrease in your living standards, which is not usually ideal for me, right? So I would rather focus more on gaining more assets than trying to squeeze or shrink my liabilities. And the main reason why my goal is to increase my net worth, which basically means, acquire more assets, is that once you get to a certain net worth, you can reposition your assets to generate cash flow. So for example, right now, I actually own a $1 million rental property, and it actually doesn't cash flow. Now, this is where most people gasp and say, oh, you're so dumb for buying a non-cash flowing property. But the reality is that if I wanted to, I could take that $1 million rental property, conduct a 1031 exchange, and basically exchange this $1 million property for maybe 10, $100,000 homes that do cash flow. So the third realization that I had is that if you want to grow your net worth, you have to acquire assets. Now, this concept that I'm going to show you is really, really powerful, and it is basically the basis of my investment strategy. So there's a term out there called compound asset acquisition, and it's coined by Up-Level Entrepreneur. So what does it mean? The idea is that when you buy an asset, you can leverage that asset to help you pay less taxes on your W-2 income. That's what I do. So in 2022, I bought about $2 million worth of real estate, and I saved myself about $80,000 in federal income tax. So if you want to go watch a video on how I did that, you can go watch the video right here. So you can see where the compounding takes place, right? Because you're saving money in taxes when you buy this real estate. And instead of that tax savings going to Uncle Sam, you're using it to go and buy more assets. Basically, you're able to buy more assets and you can acquire more assets in a shorter period of time. So to illustrate the difference between someone using compound asset acquisition versus someone who is not using it, let me give you an example. Most Sams make, let's say, $500,000, and they're gonna pay about $113,000 in federal income tax every single year. Most of you guys are gonna throw your money into your 401k, your Roth IRA, and then you're gonna put the rest in index stocks and rinse and repeat year after year, right? With that approach, you are basically paying the full amount of that $113,000 of federal income tax every single year, besides a little bit that you save from putting money in the 401k. Now, here's that same scenario, but let's use compound asset acquisition. Now, obviously, the first step is you're gonna go make $500,000. And within that year, you're gonna be able to save maybe $250,000 of after-tax money. That's gonna be money that's sitting in your bank account. But we're gonna use that $250,000. So how are we gonna use that money? So I would say maybe take that $250,000 and go buy $1 million worth of real estate and put 25% down and turn it into a short-term rental. Now, the reason why I say turn it into a short-term rental is so that you can utilize a strategy called short-term rental loophole. Now, I am not gonna go into the details of the short-term rental loophole, but essentially, if you bought that $1 million property and utilize the short-term rental loophole strategy, you could probably save yourself maybe $60,000 in federal income tax that calendar year. And again, it's probably the best tax strategy, in my opinion, for W-2 employees who can't qualify as real estate professional. So if you want to learn more about the short-term rental loophole, you can go watch my video on that right here. So now, instead of paying Uncle Sam $113,000 in federal income tax, for that calendar year, you're paying $60,000 less. You're only paying $53,000 in taxes. So imagine spending $250,000 down on this $1 million property, but as a result of that, you save $60,000 in federal income tax that year, and that's tax-free money. And then obviously the last step in this compound asset acquisition strategy is to go use that $60,000 next year and go buy another $1 million rental property. So in essence, right, the compound asset acquisition allows that person to basically have $60,000 more of purchasing power than the person who didn't use that strategy. And that's every single year. So if you're saving $250,000 every year after taxes, but then you tack on an additional $60,000 from your tax savings, well, now you have $310,000 that you can spend, and you can go buy a $1.25 million property next year instead of a $1 million property. And that's gonna save you even more in taxes. And the idea is that you're just gonna do this year after year after year, and every year you're gonna save yourself maybe $60,000 in federal income tax, depending on how much real estate that you buy. Now, the fourth realization that I had is that you can reposition your equity to create cash flow. So let's say you use the compound asset acquisition strategy and you accumulate maybe, let's say, $6 million worth of real estate after 5 years of doing this. And let's be super conservative and say that, in those 5 years, none of your homes have appreciated at all. Now let's say that you're getting closer to retirement and you want a little bit more of cash flow, a little bit more passive income coming in. So what you could do is you could take that $6 million worth of real estate and conduct a 1031 exchange. Basically take these $6 million worth of real estate and trade them for different or like-kinded properties. Typically properties that might be able to produce more cash flow. Maybe you take one of your properties, maybe $1 million, and you exchange it for a sixplex in Arizona that can cash flow you maybe $2,000 every single month that you own that rental property. Now multiply that by 5 because you have 5 rental properties. And so effectively what you can do is you can trade your real estate that really doesn't cash flow that much, and you can exchange them for real estate that does cash flow a lot, and that can be your source of passive income for your retirement. Now let me walk you through some of the properties that I'm looking to buy in 2023. So again, I am a married dink, which stands for double income, no kids. So my strategy in 2023, 2024, 2025, and so on is basically to buy close to about $1 million worth of real estate, use something called real estate professional status and bonus depreciation on that $1 million worth of real estate to save me about $60,000 in taxes for this calendar year. And I'm basically gonna use those $60,000 of tax savings in 2024 to go buy another $1 million worth of real estate and then that $1 million worth of real estate is going to save me $60K in taxes. I'm going to reuse that money in 2025. I'm just going to keep doing that year after year and after year. So then the real question becomes, where can you buy $1 million worth of real estate year after year after year? Well, the first thing I should mention is that if you are going to do this, you are basically utilizing the buy and hold strategy. And typically for high earners, buying it is not necessarily the hard part. The hard part is really holding the properties, and let me explain. Let's say you want to buy $1 million worth of real estate in the Bay Area. Well, that can only get you a 3-bed, 2-bath townhouse. And with today's interest rates being at, let's say, 7%, even if you put 25% down on that investment property, your monthly payment is still going to be, let's say, $6,000. And that mostly just includes your mortgage, your property tax, and insurance. And that doesn't even include, repairs or maintenance. And the problem here is that townhome would probably rent for only $3,500 per month. So what does that mean? That means that every single month, even with a tenant inside that property, you'd be losing $2,500 every single month. So the goal for me is essentially to find a way to buy about $1 million worth of real estate and have the tenants at least cover all my expenses for owning that $1 million worth of real estate. Now, the thing you have to understand is that if I'm going to be buying $1 million worth of real estate every single year, I can't have each purchase, result in me losing $2,000 every single month. Because sure, maybe I can sustain that for 1 year, but by year 2, if I buy $2 million worth of real estate, that means $4,000 is coming out of my pocket every single month. And that's just not sustainable in the long run. So the goal for me, at least, is that if I'm buying $1 million worth of real estate, and that's going to cost me, let's say, $6,000 per month, I want the rent that I can collect from that $1 million worth of real estate to at least be $6,000 a month, so that I'm not burning a hole in my pocket for holding this real estate. So for example, a strategy that you can employ is maybe buying 2 $500,000 homes, right? Because with those, maybe you can collect $3,000 in rent from each one. So total collectively, you bought $1 million worth of real estate and you're collecting $6,000 in rent. Remember, this is just the mortgage, property taxes, and insurance. You're still gonna have other expenses related to owning that real estate, but for the most part, most of the costs of you owning that real estate is basically subsidized by your renters. And now, because these homes are not burning a hole into my pocket every single month, I can continue to buy real estate year after year after year. And eventually, within a few years of owning that real estate, my rents are going to increase. So homes that break even today at today's interest rates, in a few years when rents go up, they're going to be cash flowing. And also right now, we're in a very high interest rate environment. And if interest rates come down at all, I can always refinance and lower my monthly payments, and therefore I can create some cash flow that way as well. So another option that I'm considering is maybe buying, let's say a $1 million fourplex, right? Where the rent collected is, let's say, $6,000 a month. And that's because typically you can collect more rent from a multifamily unit than you could from a single family home. So to summarize, I guess you could say my strategy is to buy self-sufficient homes year after year after year. And when I say self-sufficient, I'm basically saying that I'm buying real estate properties where the rent that I collect is almost equal to, the monthly payment that I would owe if I were to buy that real estate. And the idea is that over time, those rents are only going to go up while my mortgage payment stays the same. They're going to be able to pay down my loan for me, and over time, I'm just going to build a lot of equity in those homes. Now, if you're thinking, well, why don't I just buy a cash flowing property in today's day and age? Well, if you can find me a $500,000 single family home that cash flows in today's market with today's interest rates, please let me know, because I'll be the first one in line to buy it. Now, if you want to take it one step further, you can definitely convert some of these units into short-term rentals, for example, to increase the amount that you can collect on a monthly basis from these rental properties. That way you could potentially not only just break even, but you can actually cash flow a little bit on top. But you have to realize that starting a short-term rental is kind of like picking up a part-time job. So if you want to learn a little bit more about some of the strategies that I mentioned in this video, definitely go check out my other videos on my channel. I talk a lot about this kind of stuff. If you're a high W-2 income earner, definitely go check out that video on the short-term rental loophole. Again, it's probably the best tax strategy play if you want to be saving a lot of money off of your W-2 income in terms of federal income tax this year. Also, if you want to schedule a one-on-one call with me, the link is in the bio. You can go ahead and schedule that call. So thanks again for watching, and I hope you guys learned a little bit more about real estate investing and how it can help you reach financial freedom faster. So make sure to subscribe, and I'll see you in the next one. See you guys.